Hello. Welcome to our next chapter, that is the taxation of dividend, deemed dividend, liquidation, and buyback. So this starts with your section 80M. Your 80M talks about intercorporate dividend deduction. So this is actually a 6-year deduction, but because we are studying dividend, so therefore I thought we should cover this over here. So 80M talks about intercorporate dividend deduction. Now, if you can understand, it says intercorporate, that means between companies. So that means if a domestic company, what you have to make sure over here is only domestic companies are allowed this deduction. That means your foreign companies will not be allowed this deduction. So if a domestic company receives dividend from whom? So it can receive dividend from anybody, that is your domestic company, your foreign company, or your business trust. So if a domestic company receives dividend from domestic company, foreign company, or business trust, in such a case, it will receive a deduction. Did it receive a deduction of what? It will receive a deduction of dividend that it has received, or dividend that it has distributed. Dividend distributed by the domestic company up to 1 month before the 139 due date. So whichever of these is lower. So either the dividend that you have received versus the dividend that you have distributed up to 1 month before 139 due date, that will be the deduction amount. Next is your deemed dividend. So under deemed dividend, there are basically 5 sections that you have to remember. So 222 A, B, C, D, and E. This is your deemed dividend. Do remember the section numbers over here. So 222A talks about distribution of asset. So if a company distributes asset, it will be considered as a deemed dividend. That means you are actually not giving dividend, but you are giving any other asset. So this asset will be considered as dividend. So what will be the deemed dividend amount? It will be the fair market value of the asset. Next is your section 222B. So I'll just change the pen color so that it is visible. 222A. Next is your 222B. 222B talks about distribution of debentures. So it will be your fair market value of debentures. 222C is distribution of assets on liquidation. Distribution of assets on liquidation will be the fair market value of the asset that is distributed. And 222D talks about any reduction of share capital. Any reduction of share capital. In such a case, the deemed dividend will be the fair market value of the asset. So what happens in such a case? You give asset and you reduce their share capital. That means if their share capital was of 10 rupees and you give them an asset, so in such a case, you say that, sir, I have already given you some asset, so this 10 rupees will now be considered as, say for example, 7 rupees. So this 3 rupees, that share capital has been reduced because we gave them an asset. So this asset that we given, the deemed dividend will be the fair market value of that asset given. Now for this table, deemed dividend will be to the extent of accumulated profit. That means only to the extent of the amount that it has accumulated profit. That means in its reserve, whether it is capitalized or not, only that will be considered as deemed dividend. Over here, under 222E talks about loans and advances by closely held or unlisted company. So if it is paid to a shareholder having more than or equal to 10% voting power in a closely held company. So if there is a person who holds 10% or more voting power in a closely held company, in such a case, it will be taxable to the shareholder if any loans and advances are given. Okay. So how is this to be read? If any loans and advances are given by a closely held company or an unlisted company to whom? To a shareholder having 10% voting power, in such a case, it will be taxable to the shareholder. Next is if it is given to any concern that means any company, any corporate, where this person, that is one person, this one is the same person who has 10% voting power in the closely held company. If this person has more than or equal to 20% voting power in the concern, so in such a case, it will be taxable to the concern. And last is any person on one's instruction. So over this one is the same. If there is any person to whom a loan is given on this person's instruction, it will be taxable to one. And over here it is deemed dividend to the extent of accumulated profits only. Yeah. Then next is in case of liquidation. So any asset transferred by company, any asset that has been transferred by company to shareholder, in such a case, the company will not pay any tax. It is the shareholder who will pay tax, and that will be on capital gains. Now the fair value of consideration, what will be the fair value of consideration that the person has received? It will be the money plus the fair market value of asset, that he has received, minus what has already been considered as dividend. So minus deemed dividend under section 222C, because 222C talks about liquidation. So on liquidation, if you get any money, you get any capital asset, what will be the fair value of consideration? It will be the money plus your fair market value minus deemed dividend under section 222C. Next is your period of holding. Period of holding from date of acquisition till date of liquidation, and the cost of asset will be the fair market value of asset. Okay, because this asset, if you sell later at a future date, what will be the cost of acquisition? It will be the fair market value of the asset. Now, next last section in this chapter is your 115 QA, that is buyback of shares or securities. So in case of buyback, what you have to remember is there are in case of domestic company. So if you say buyback, that is BB. So therefore it is 20 plus 12. So how do you remember this tax? So if there is any buyback of shares by a domestic company and the buyback minus issue price, so what will be taxable? It will be taxable of buyback minus your issue price. So that will be taxed at the rate of 23.296%, that is 20% plus 12% plus 4%, and for the shareholders it is exempt. And in case of a foreign company, it will only be taxable to the shareholders in case of your capital gain. And with this, we are done with the chapter, and I'll see you in the next one.